Yes, we are now here for another episode of the Real Life Game Changers. Are we in for a treat in this episode? Because we are going to be covering everything that you need to succeed on your property journey. I mean, it sounds pretty vast, but one of the main things that people need is money. Wherever they get that money from, there's different ways we can get it from. And our special guest tonight, who is a game changer, we're going to be talking about some very interesting things. So, I think we ought to get straight into it. I know we just had some technical difficulties for those people watching live, but whoever's listening in later, you're going to get the full shebang. So thank you for joining us, Howard. Now, let me tell you a little bit about Howard. Howard is the director of Howard Bowes Group, which owns several different companies across financial services, estate agency, sourcing, and developments. And I like this call because sometimes the professionals, they don't always invest in property as well. But today, Howard does have that extensive portfolio as well. So he has experiences from both sides of the table. So this is going to be amazing. So first of all, let me see your comments here. Like, where are you? And I want to just see whereabouts you are. What do you want to get from this? What's your biggest challenge with raising finance? Because Howard is going to do all of that. So thank you, first of all, for Howard coming on to the Real Life Game Changers.
Thanks for inviting me along, Mark. Really appreciate it.
Yeah, absolutely. So just give us the highlight reel. You know, who was Howard growing up and how did you end up doing what you're doing today?
Yeah, great. I'll start off with my journey being pretty young. I bought my first property at 19 and then rented it out to students, moved in with my brother, quickly found out that was a HMO without really knowing it was a HMO to start with, but it cash flowed well. So that was my very first property deal. I then did a sequence of other deals. I built a portfolio. I was financially free by the time I was 28. I moved from South Wales, where I was living, down to Dorset and lived in Poole, some of the most expensive real estate in the country, down there near Sandbanks. So fantastic place, enjoyed that. And then I got hit with the proposition of divorce. I gave away my whole property portfolio and started again 7 years after that. And so I built a property portfolio twice. The second time I made less mistakes and I've got more property with better cash flow and lower gearing. So I definitely got it right the second time around. I made less mistakes than the first time around.
Wow. So what you're saying is we should all start again.
Maybe so. At the time, I thought it was pretty unlucky, but it's definitely shaped the person I am today, the confidence I've got, and the fact I can kind of do it twice. I think is a good accolade, right? So I'm proud of it.
Well, they always say that you build it better and faster the second time around, or maybe some people the third time around, all the rest of it. So yeah, let's get into it then and see, what some mistakes you've made. Let's discuss it. Let's hear from anybody watching. By the way, if you want to be in for a chance, I actually forgot to ask you, Howard, I don't know if you've got any freebies you can give away, but what we're going to do, I don't have the actual small book, but I've got the manuscript. Look at the size of this thing, but we'll give this away. I'll sign it for you. In fact, I might as well just give this. There's only 10 of these on the planet.
Okay.
We ain't printing any more of these. This was just a manuscript. We actually printed it by mistake, if I'm being totally honest, because, why would you need a book this big? So anyway, we're going to give that. Have you got any freebies to give away or just your knowledge today?
I'm going to give away plenty of knowledge, and let me come back to that. Let me have a think about what we can do. So I'm sure we can do something.
Sure thing. So to be in it for a chance to win the freebies, you've got to share this on your timeline that you're watching it live. Put hashtag live so we know that, and also tag at least 10 people. That will put you in for a chance to get some of the freebies by the end of this show. So just give us what you're actually doing now. What are some of your businesses doing, first of all, because this might help if anyone is listening live to ask some questions as well. So just give us what you're actually doing now, type of property deals, what your business is doing.
Yeah, great. So the main business, the oldest business in the group, is the Harvey Bowes Group. I'm Howard Bowes. Lots of people end up calling me Harvey, but that's another story. So it's Harvey Bowes is the name of the company, and the main company is the finance company. So we specialize in arranging finance for property investors, whether that be simple buy-to-let mortgages right the way through to development finance. So that's the one key business, and we've been doing that for 24 years. And then we've recently opened up our own real estate agency on a similar brand under the Harvey Bowes name, Harvey Bowes Real Estate. And we did that so that we can really get access to great deals. So it's sourcing from the other angle, but with the full understanding of a property investor, not an estate agent. And then besides those two businesses, I'm also very active in my own portfolio. So just last week, I was lucky enough to be boarding in Val d'Isere for the week, and I still managed to get a property deal over the line to exchange contracts on a pub that we're going to get planning for 4 flats. I've got a big old castle-looking building at the moment, an old artillery hall from the 1800s, but built in castle style with turrets right in the city centre, been derelict for over 10 years. We're just getting planning for 14 flats on that one. Haven't got planning yet, but it's on its way. So there's 2, and then I've got one now where I've got planning. Funnily enough, that's 12 flats in an old Grade 2 listed building that used to be a bonded warehouse once upon a time in the late 1700s. So we've got that building as well. So they're 3 projects I've got currently in the development stage. Then obviously I've got a portfolio which includes, Mark, some simple buy-to-lets bought in the Welsh valleys at 40, 50 grand a pop. And so we're regularly remortgaging those on our own portfolio as well. So that gives you a synopsis briefly of what I'm doing right now.
Good. And just tell us about like the financing, the services from the finance, because I know you've been getting your teeth into some juicy deals, helping other people financing with all this knowledge you got. So just tell us about some of the deals, the details, the amounts that we're loaning on, and then we're going to get into the down and dirty of all the challenges that people perceive are happening right now.
Yeah, good. Okay, so a lot of the deals that we do, they vary from one side of the equation to the other. So, we are funding properties in the Welsh valleys and Sunderland at 50, 60 grand purchase prices. But a lot of what we do is in what we call the mid-range. So from around 300K to about 2 million, where people are doing office to resi or commercial to resi conversion stuff. That's a big area of the market right now because, of course, stamp duty and other costings have taken us that way. And the fact that planning has arguably become easier for those type of deals is also taking people in that direction. So we found that that's a big area of growth right now. And if you know how to structure the deals, you can get some really good finance on these. So quite often, Mark, what I'm involved in is not just the funding side of it, but actually clients get me involved in the negotiation for them as well with the vendors, opening up conversations, exploring whether things can be done with, for example, what we call deferred consideration, which a lot of people call it vendor finance. It's not the right term. Lenders run a mile when you say vendor finance. When you say deferred consideration, suddenly it becomes acceptable, right? So sometimes we're involved in the framing of the deals as well. And I love that. Brings me alive as a person to be right there at the front of negotiation. And then, doing the funding and also helping the process. Some of these lenders are asking for so much more information now about how they're going to about what they're going to need before they release funds. So, we're helping people line all that stuff up and also making sure that when things overlap with each other. So you're not just getting one report, downtime, next report, downtime, getting it all to overlap and run as quickly as you can on the lead up to the purchase.
Yeah. And this is key why you must work with someone who is aware of the process. I mean, people in our real life community, they're going to know this, and very much they're always getting this type of advice, which, by the way, for those people that are part of the tribe, you're going to be into the mastermind. Howard's going to be there. You're going to be able to ask him questions right there live, and have that interaction, help you out with any of your deals, creative ideas as well. And that's what before we get into the creative ideas, Howard, why is it that people are finding it so difficult, or they're saying, I mean, we were just talking, I was just telling you, I got something through the post today. It's like my annual statement. And what does this say here? Yeah, this was a 10 years fixed. I've 10 years fixed. I've got 73 months left. And I fixed this in at 5.1%. Yeah, 5.1%. This was, ages ago. This was 120 months. When was this? 2019. Yeah, 2019. And so why is it that people are panicking? What's going on in the marketplace from your perspective?
I think, rates have changed, and that's obvious. We all know that. But the reality is these rates are the rates that property investors who've been going for a number of years, if you've been going a decade or more. Sorry, 1 second.
Even the dog's excited. Look about the rates. Yeah. So just why Howard has his pet control going on there.
Okay, great. We're back. We're back. So
just on. You're right with the rates that people have been doing it a long time.
Exactly. So look, people have been got rates that are prior to 2008. Those individuals will understand that that we used to work at 5 to 7%. That was a regular buy-to-let world. And for people that stacked their deal on the basis that they could get a 3.5% 5-year fix, and that's the only way it cash flows. Well, guess what? You shouldn't have been doing deals. Those deals were not good enough. They're not a property investor's deal. You were buying deals. And I know that might sound harsh for some, but if your deals don't stack at 5 or 6 or even 8, then the question mark is, should you have done them? I wouldn't have.
Yeah, I mean, it's not harsh if you ask me. I mean, even in the golden days of getting dirt cheap, rates, which is the last few years, we were still as a minimum, what we call the stress testing at 6%. Yeah, and as we started to see some things might change, you stress test at 8%, but we know we can still get so I got this rate that's fixed at 5%, 5.1% for the 10 years. I took that rate when you could get cheaper rates because we just wanted to lock things in, and just be sure on some of them and have a bit more risk on some of the others. But we're not far away from this rate today, are we, Howard?
Exactly, no. And rates have softened a little bit. So we kind of predicted this at Harvey Bowes, and we told a lot of our clients just to hold off if they were looking to remortgage, refinance, or if they could stretch a purchase a little bit, hold off till about now, second week of March. And guess what? We saw the rates tumble exactly as we thought. And so now, things are starting with a 5 again, whereas, at the end of January, things were starting with a 6. So, it's definitely gone in the right direction. And now is actually a good time to lock in again because the rates are better than they were, and they're not going to get much better than this for some time to come.
Yeah, so a couple of things I think we're worth discussing. I mean, one of the things was that many people. So I don't know if you heard this or you're involved. You're probably more closer to it than I am. Dealing with other people's deals. I'm obviously only doing my own. And obviously some advice here and there from others, but we keep the professional advice to the professionals, the trigger pulling advice to the people who are pulling the trigger. Yeah. So there were that many people applying, remortgaging, wanting to fix in because there's all the hearsay that it was increasing, that actually the rates were inflated. Yeah, this is just like what was seen. This is what was even said. I even heard this from what you might even call the inside, that we've got that many people asking. They're just going for it anyway, and we can't handle it all, so we're just pumping the rates up. And if we actually look at the margins, that people are making, it's more than it normally is. Okay, so you got the borrowed money rate anyway from where, and also then people will stick their margin on it. Now these margins are more than what it has been previously. So are we talking about there was a bit of an inflation there, and this kind of really made the market?
Absolutely. Look, it was supply and demand. So people were going crazy, booking in their rates, panicking about what was going to happen next. And the reality of that is that we ended up in a situation where with supply and demand, there was so much demand, they could put the rates right up. I mean, Shawbrook's rates were touching 9%. Shawbrook haven't had rates of 9% since they opened their bank. Right? Until recently. Now their rates have come right back down again. They're at late 5s. But that just shows the premium that they had on top at the time. Now the swap rates, they did go a bit higher than they currently are. But you are absolutely right. There was extra margin in there because people were jumping on. And, something else is quite important, Mark, as I'm sure you know, but to recap for the audience, if you think about when Mark Carney became in charge of the Bank of England, he gave many quotes that keep being used in the press, but one they forgot about is when he said, half is the new norm. Now, we used to be used to rates on a regular basis of 5 and 6% base rate. If you look at history, regularly at those kind of levels. When there was periods of inflation, the base rate could go up to 10%. Some people here will remember 1992, where the banks were asking 19% for mortgages, right? And the base rate was more like 15% back then. Now, here's the thing. Half is the new norm because the level of everyone's gearing now, we just can't cope at those kind of interest rates. And the rules of the game have changed as well. So without going into too much detail about it, but just to hit the point home, we used to be part of the Economic Monetary Union when Norman Lamont was Chancellor of the Exchequer going back to like 1990. And that's when rates went through the roof. That was to control our currency against other currencies. Now, the franc, the peseta, the Deutschmark don't exist anymore. This is not 1992. And the remit of the Bank of England is not to control our currency against the euro in the same way. It's all about inflation now. So rules of game have completely changed. Were we ever going to see 19% interest rates? I've said all along, absolutely not. So, what we're seeing, half is the new norm. So now we're going through a period of inflation. We've got these rates available to us in a normal, other than the spike we just had, 5 to 7%. And once the economy calms down, it's got gummed back up again, then we're going to end up with, the Bank of England dropping the rate to touch to ease things out. Maybe we go back to a 3.5-3% base rate. Don't think we'll go back to a 0.1 or 0.5. But, in a normal economy, go back to that kind of rate. And then the lender's rate will be about a 2% margin over about 5%. Lenders have predicted that. That's why they're offering 5% now, because that's the norm. About a 2% over base is a normal scenario.
Yeah. And also, I want to touch on this point, Howard. So, we got this situation where inflated, it's kind of stable as well. But I want to put it to you, what do you reckon about the next 2 years? Because obviously we've got some certain events that start coming up, and you got to be careful what you're saying here, because everything's transcribed and they just will restrict this going out. Yeah. So, certain events that happen every so often in every country, and these events, they start to cause some volatility, right? And people say, I'm going to make this decision. I'll help you this way. I'll help you that way. I mean, come on, what else can I say for everybody to know what we're talking about here? So what would you say if it's look, the next 2 years is really where, if people really want to capitalize and lock this stuff in, because like you say, I've got stuff here, I'm locking in 5 years, 10 years, and I've been doing that before anyway. Now's the time over the next couple of years to get started, get things locked in and benefit from these rates that people are really complaining about. But these rates, you've got to lock it in now before things start going on a bit of a volatility ride in the next 2-3 years. Because I think that over the next 5 years is a storm.
Yeah, oh, absolutely. I agree with you 100%. And I agree with what you're saying. There's a significant thing that's happening in let's say, about 20 months from now. And I think there's going to be as much stability and promises in the marketplace as they can possibly create over the current time. And then after that, they're going to have to let it loose, right? And so when they let it loose, that's when we're going to have to be ready, batten down the hatches. So yeah, I think you're right. I think now a good long-term fix is a very healthy strategy.
Yeah, but also I think, and this is what people, I always say, if your business strategy relies on waiting for something, then you haven't got business. It's not business. What are you waiting for? Nobody knows. I mean, 2019, the people who are waiting, I think they wish they didn't wait. Yeah, but even the ones that did, as long as you know what strategies you can benefit from. So I think the people who do get things moving, get locked in, acquire lots of real estate over the next couple of years, when the waves and the storm starts coming, they're going to be better equipped, because this is going to be even worse than it was in the run up, 17, 18, 19, then 20, world go all crazy, can't even go to work, all this crazy stuff. This time it's going to be worse than that. Yeah. What do you have to say about that?
Yeah, I agree with you 100%. We've got a storm coming. There's no doubt about that. And so taking some action now, re-strategizing now. I mean, one of the things we do, and actually you said about, maybe offer a freebie, we could quite happily do a portfolio review for anybody that's got a portfolio and thinks, how can I mitigate some risk and re-strategize ready for the future? We can certainly offer that service with the resources we got in Harvey Rose. And I think it's a very wise decision. So, I looked at everything that I've got in my portfolio, and, I sold off about 40% of my portfolio between June of last year and June of the year before and March of last year. And my reasoning for doing that was to re-strategize, to get rid of some of my lower performing stock at a point when the market's still got a bit of growth in it, but nobody knows where the top of the bottom is. So we decided to take action, get that stuff sold, restock, bring that money in. And now I'm doing some bigger development deals closer to city centres, less stuff in the Welsh valleys, perhaps where there's less employment, etc. And there's, going to be where the house price, if there's an adjustment in house prices downwards, it's usually bigger in those large areas of non-employment. So re-strategized, brought some of my portfolio south. And look, for me, that was a right decision. I haven't sat and waited and think, well, I've got another 12 months, another 18 months before I hit the top of the market. I've done the right thing and I've recapitalized, and that was a great decision. But it was about taking action.
Absolutely. And I don't even remember the time period when we started to do the same thing. But I know that we actually kind of like publicized it. Yeah. So we did some auctions. I mean, people can even go to the Mark Harvey YouTube channel now and watch it. I was literally in the hairdressers getting my hair cut while I was watching the live thing, selling a few properties. And like I mean, I'm talking about, I bought a house for like 95. We did some work on it, cost about 40 grand. I kept it for a couple of years, but then we was like, I want to sell some of the smaller stuff. Yeah. Some of the smaller units, we're going for growth. We're going for aggressive. We were kicking the gears up again, and we sold it for 291. Another we bought for 180, sold that for 350. So I think after we publicized it and people seeing that, the next couple of months after that, the auctions were just flooded with properties. I was like, oh my God, was that the right thing to do, to let everybody know what he was doing? Yeah, because then it kind of like slowed down, and there was so much coming to the market that those prices were not, going there. But it's about cash flow. And I think what people are worrying about, especially with these house prices, I mean, I want to hear from you, but let me just give you one example how we built this house. It was really massively delayed, with the timings. We were supposed to sell it before 2020, right? But it was 18 months delay. These things happen. Anyone who comes to like the training that we do or anything, I actually tell them the opposite of the blue skies, yeah? Which is, it's not if it goes wrong, it's when it goes wrong. We don't train you what to do when it's going well. Anybody can do that. We train you what to do when it's going wrong. Yeah, that's what you got to know how to handle. And anyway, couldn't sell this house for 495 like we wanted. Couldn't even sell it for 450, and it took us a while to drop that. Couldn't even sell it at 435, and we were thinking, hold on, even if we could keep going here, but like we're just throwing money away. Like we'll still make good money. It's 115 for the land, cost about 120 for the build. So it's still decent money in it. But we were like, hold on, let's switch. Let's go to a buy to let. Now, I couldn't even sell it at 435, but yet they would let me refinance it at 475. Yeah. So we managed to pull 153 out anyway. Yeah. And have that money to play with and start investing in that elsewhere. But now we're getting a couple of grand a month, 1,300 quid mortgage, so 700 quid for a buy to let, especially up here in the Midlands. That's pretty decent. Yeah. So what people are worried about is, but the house market's going to crash, but the values are going to come down, all the rest of it. What's your opinion on that? And why are people looking at that the wrong way?
I think one of the key elements to that is, as you've said already, is cash flow. Is that really, you're investing in property for cash flow. If you've got the right cash flow, you can pay the debt down. But when it comes to house prices, it's a cyclical market. It goes up and down. That's a capitalist economy. We're never going to avoid the boom and bust of a capitalist economy, because that's what we are. And so, if you look at land ownership over time, property ownership, it is a fantastic performing asset, where you can pay the debt down for a start over time. So if it's cash flowing well, you can pay your debt down. But if you look at it, it's always going in one direction. So, it only matters if you need to recapitalize. It only matters what the value of the property is if you have to sell at a certain point. As long as you don't need to sell, you just sit and wait. It comes back.
Yeah. And that is, in all my years of, doing this, people asking me questions, one of the most misunderstood things. They're like, oh, yeah, but what if you're in negative equity? And like you say, that has zero relevance unless for some reason I must sell it. Now, some other people who are around, Midlands as well, over near the West, yeah, they were telling me about all these houses that were people buying for 500,000 and 600,000 off plan, and all these new things, and they weren't even that good. Some of them have got major problems with because they were just banging them up. Yeah, now some of these are on the market for like 400. Yeah, so like that, all that money so their deposit, their deposit's gone. They're probably just only selling it for the mortgage that they bought it for. Yeah, and this is when people haven't got the right knowledge. When like there's no, like you say, I don't know if it's at the bottom. I don't know if it's at the top. Every 7 to 12 years, prices are doubling, right? is what the history says. But like that 7 to 12 is just like, where in the cycle, did I buy it? I mean, even if you bought it, close to the top, it's still gonna, it might just take a bit longer to get to the double. I remember the house that I purchased when I was 19. It's funny you said you bought your first house when you're 19. First house when I was 19, I had no idea what I was doing. 5% mortgage. What did we buy it for? I think we bought it for like, 117 or something like that. So then the mortgage was very high on it. I think we went interest only, so we paid, so it wasn't even being paid down. We had to sell it for a loss. We didn't have to sell it for a loss. I was buying a different house, moving close to where I was working. You sell it for a loss. I reached a couple of years ago, so I don't even know what it is now. A couple of years ago, that house, I can't even believe that house was like 230. And I'm thinking, what? This is insane, that little ditty house. So the market is going one way, but yeah, it does take a few ups and downs along the way. What advice, what logical information? Because my kind of information, sometimes I lose my patience, and I'm like, just freaking take action, man. Like, what are you doing? Yeah, but what logical information can you give from a financial perspective and your experience of all these people who are still procrastinating, that need to, just get involved? Because it's like you say, it's only going one way. And now, over the next couple of years before the storm comes, you better get something sorted, so you got some financial stability.
Yeah, absolutely. Look, 100%. And the important thing to know as well is you're right. It's all about taking action. If you don't take action now, and if some didn't take action in 2019 because they're worried about what would happen, 2020 when the pandemic began and people were saying there's going to be a house price crash. I remember being out on social media. I was actually in Canada when the UK went into lockdown. I was in Vancouver. I was walking on Vancouver seafront there, harbour, and I put a post out on Facebook to say, look, all these gurus are saying that property is now going to crash. That's rubbish. The economy is not ready for a crash, right? And it was a good time to keep buying. That proved to be right. I think it's still a good time to be buying right now, and a good time to take action. And then prepare yourself. You've got to be prepared for all situations and all scenarios. But one thing I would say, Mark, and I think this is quite important, is that people associate as well 2008 with the banks being short of money and calling in some loans. Now, that was because there was a financial crisis that caused the recession. The last time the financial banks were calling in as many loans as they could, the 1920s Wall Street crash. It doesn't happen in every recession, right? And what's more important than that is, some of the lenders that disappeared, we've not seen them lend since, like Mortgage Express, have still today got thousands of mortgages out there in the UK because all the landlords that just kept paying their mortgage, they've just kept servicing the debt. It's sat there in the background. It's privately owned now, went into ownership with the government, and then Mortgage Express was sold back out, and it just ticks over and it gives them a good return on their money. They haven't called the loans in if you kept paying your mortgage. So as long as you've got a tenant that is paying your rent and you're paying your mortgage, you'll be absolutely fine. So, the important thing is knowing you can service the debt. Therefore, we come back to that old advice. It's about cash flow. If it's got a good return on it, then you look after that property asset, then you'll do well.
Yeah. And, what do you have to say about, and obviously this is, this is probably too much for some people, but what about, this whole recalling loans and, this, if money is a problem or that, like, at the end of the day, it's all fake. And it's all built upon trust. So we can just, add a few, it's not even printed anymore. We just add a few more digits, onto the screen. What do you think about that?
Well, yeah, we all know about fractional reserves, and we're going to go off on a completely different long-term subject here if we go into this element of it. But yeah, look, the banks at the end of the day, they're licensed to print money quite literally. They know what they're doing. They will adjust some debts for people who are defaulting, but not for those who are servicing their debt. That's the important thing. So, the banks only make a profit by turning this money around and getting a return on it. They're interested in profit as much as anyone else.
That's another thing, that is one thing. By the way, like, I don't just sit here giving other people advice. I'm sitting here like giving it, I've got to give my own advice. I've got to get, people to tell me to keep me sane. And like, I always remember, like, at the end of the day, banks, like, someone said to ask a question, they said, what if banks stop lending? And I'm just like, impossible. The industry is too big and they only make money by lending money. You know, so how are they going to stop? And it's like, if less people start taking loans, then they've got to do something with their margins. They've got to do something with all these bonuses they're paying, yeah, to continue making sure that people get loans. Yeah, that's one thing. Another thing, I want to say this because I thought of it before, but I forgot. Yeah, I've also heard, because of this storm that's coming, yeah, like you got all of the banking industry or the lenders or whatever you want to call that market, right? The lending institutes, yeah, this kind of thing, yeah, who are lending borrowed money, yeah, and so the base rate is giving them some kind of like determination of like, well, you know, that's where you got to be, roughly around here. You got to put your margin, yeah. But what about there's people with money and there's funds that it's not borrowed money, yeah, and they look at the UK especially, yeah, you might be some other countries as well, but they look at it and they say, yeah, this is solid, you know, this is a solid country, you know, these guys are a good investment, and they start lending money, yeah. What about that? Do you have any experience of that?
Yeah, loads of that. So look, so we run our own Harvey Bowes private finance. We have, as well as our mortgage broker, we have a private finance division, which is funded by international family members, family managers and people like that, where, you know, for our existing Harvey Bowes clients that we really look after, who've earned their time with us, done a few deals, that you know, we have access to those funds. And those funding lines, are growing all the time. That's why there's more and more bridging lenders moving into the market. What they're doing is they're using very wealthy, effectively family money from family managers and people like that. So it's not just city money that's going into these places now. You know, there's a lot of money swashing around. So there's a lot of liquidity in the market. And you're right, if banks did pull, which I don't think for 1 second they would, then people will step into that breach with private funds, because at the moment the banks can't give a good return. Now, if the banks stop lending, then they'd have to stop paying interest too. They would just become storehouses for money, effectively, digital money, of course. So, you know, that whole principle doesn't work, because they have to lend the money. But we do see this rise of private finance in any event.
Yeah, I mean, I do love sitting here and you know, pressing a few buttons and being able to pay anything. And sometimes when I start complaining to myself, like, "Oh man, you're asking me for one-time passcode again. I already paid this person. Just let me pay it." And then I think, hold on a second, my mum and dad used to have to walk down to the bank to make this transaction. So, you know, I'm glad I can just sit here, you know, and do it. Yeah, so that's handy. But on the other side of it is, like you say, if they're not lending money, then what use are they? You know, they're not going to do anything. But what I'm talking about, Howard, is not if the banks do or they don't lend or whatever's going on there. I'm talking about people who are like, hey, yeah, like we'll lend with interest rates, nice and steady interest rates, because we're not governed by anyone lending us the money. Like you say, we got the funds already. People, I mean, there's you know, people are always like, oh, who's going to lend me money? I'm just like, are you crazy? There's not enough There's not enough people out there creating opportunities for people to invest in. You know, there's definitely more money than there is deals. And that's actually why we've now, no, it's not the only reason, there's a big story behind it, but like we're creating the ultimate environment to work, rest, and play. So I'm just taking my knowledge, and it's the same structure as, but in fact, I did a video of how to go from buying a HMO to buying an island. Yeah. And it's the same principle. And what we're doing is we're creating these resorts, which are hotels and spas and restaurants, and there's gyms, and there's a charity that trains children and takes care of children. So you can drop children in there, go to the workspace, have the workspace or the office space that you hired, part your membership, go to the gym, go to the spa, go to the restaurant, play some tennis. You know, you've got all of these facilities there, and it is your ultimate community. Yeah, as well as, you know, be able to spend time more. And we're raising 223 mil, you know, of private finance. You know, we obviously want the stuff for the banks. They'll lend it based on the EBITDA, and obviously some for the value of the, you know, the building itself and all that stuff. You know, but really that's what we're expending, because there's so much money out there, Howard. Like, what advice or what other things can you say to just build people's confidence that they are able to go out there, because, you know, there literally is unlimited money.
I think you're absolutely right. So you know, if you're good at finding deals, if you've got deals, then it is your duty to offer people in your network the opportunity to get a good return on their money. You're not begging for money. You're providing a solution to the fact that somebody needs to park their money somewhere where they're getting a return that is greater than inflation. That's the bottom line.
That's another thing, actually, that did come up when you're talking about the family office money, because what also, like, some people, they think, oh, if I came into a lot of money, I don't know, people might dream of winning the lottery or the Euro Millions. Every so often it's a few, you know, 100 million or whatever. And it's like I don't know what other people's thoughts are, but my thoughts are, if like that much money is dropping in, I've got to put it somewhere quick. What am I going to do? Leave it in the bank? I don't think so. That scares me. If there was that much money in the bank, that's scary for me, Howard. I don't know about you. Yeah, I'll be like, I've got to find places to, be buying, putting it into the deals, making stuff work. We've got to buy hotels. We've got to buy, whatever we can buy that's going to generate cash flow, like we were talking about at the beginning. It's all about cash flow. Grant Cardone says it. I admire this guy. I followed him since 2016. He's like, cash is trash. It's useless. Like, what are you going to do with the cash? You need cash flow. You got to be generating some kind of income. You got to put your money to work. Like, sitting with it there in the bank is an absolute joke. And dangerous, by the way. Dangerous. Especially as the way things are going. I know people who have sold their house. I know people close to me, and I think the closer they are, the more crazy they think I am. What I'm doing. But their 50 grand that they got in the bank because they sold their house, 7 years ago, ain't 50 grand anymore. Yeah. What can you explain to people, actually, just before we start wrapping this up? What can you explain to people of the buying power of money it becomes less. And it has, especially over the last 5 years, like it's people are killing their money. Like, what can you do?
Exactly. Look, I think it's a great point, and I've got a brief illustration about that right now. In that, I was talking to somebody today, and they just had £15,000 with. They had £15,000 with St. James's Place, which is kind of investing money in stock market. It's only a tiny amount of money that they had in this one particular fund. And so we're reviewing it, and they said, yeah, but in July of 2022, the fund was worth £15,300. And in January of this year is worth 15,095. So it lost about £250 in that time. So they said, well, yeah, but it's only lost £250. They're like, well, no, it hasn't, because inflation since then has been on average 11%, and therefore it's actually lost £1,125 when you factor inflation in. So, if somebody's got a pot of money, that pot of money is getting smaller. You can't buy the same amount with that money unless you make that money grow. And as a result of that, that's why people who realize that are looking to park their money in other people's property deals so that they can get a better return on their money. And they need that return. It's giving them a service.
Another thing, not this audience, not people a part of real life, but like some people, they're like, yeah, but what are you going to do? Because you can't buy a property with no money. And I'm like, well, correct, not no money, but like none of your own money you can. Oh, no, you can't. You still need the deposit. Like, can you just explain, like, that there are financial institutes out there that are like, they know that you're doing a deal without your own money. Not everyone lends, yeah, which is probably what they're thinking. They're like, no, they've told me I've got to have the cash and it's got to be in my bank, and 3 months, tracking and all this, stuff. But there are people who will lend because they know the deal stacks, right? What can you do to help these people get out of that?
Yeah, definitely move from that mentality. But there's a general shift here. So look, so if you want to go with a major institutional lender, they want to know that at least some, not all, some of that deposit money is your money. If you want to go with some of the more niche funders, then that specialize in working with property investors, they are perfectly okay with you raising funds in other ways for the deposit, provided you raise those in solid ways. And one of those could be a loan agreement that you're giving a good return to somebody that somebody that wants to invest with you. So that is absolutely fine with the right type of lender, 100%. And we're regularly doing deals in that environment. The important thing I would say is getting the paperwork right. And that's something that we specialize in at Harvey Bowes as well, because how did I build 2 property portfolios? Well, guess what? I mean, I've got a great business. I've got a good cash flow from a number of businesses. But in order to scale the way that I scaled, I had to use other people's money as investment, and that worked for me. So I do practice what I preach.
And you have, like, not you have to, but it's insane not to. And very quickly, before we start wrapping this up, because this actually came to me today, I was like, I want to do a video on this, a bit more depth. But I remember, like, I thought in my head that, number one, I got to have my own money. So then I was like, right, I'm going to work my ass off. And you can do it this way, by the way. Like, work your ass off, have a business of some type, come into cash. I don't know, be a sole trader. Some people are making 6 figures as self-employed, professionals and all of that. You can do that, save up over a few years and all of that good stuff. And then you can use that money to invest. So you can either go to that lens And it is, you got to put a graft in, you got to put a few years in because you're limited on how much money you're going to make. Yeah. Or you can put the same type of graft in anyway that you're going to do, but get access to virtually unlimited money. Yeah. Some people might be thinking I'm going a bit far, but it's virtually unlimited. Yeah, as long as you scale properly, you're building a business, you got resources, and if you know how to do that, you get the right training, coaching, and mentoring, and then you can do that. Yeah, and you use other people's money, so you don't have to wait for that thing. And then plus now you got no limit either, because once you made that money and you put it in a few deals, now what? So you just worked all of those years, put in all that graft for what? Now you're done. You've done a few deals and you ran out of money. So now you got to do it this way anyway. So like, if I'd have knew this when I was younger, oh my God, I could have started so much sooner. I'd have probably messed it up, but hey.
Look, the more important thing when you do is that you learn from the mistakes, right? So, it's exactly the same. But I agree with you 100%. If you want to scale a property journey and build a portfolio, then getting access to other people's funds where they want to have somewhere good to park funds and get a good return is a win-win situation, without doubt.
Yeah, you've got to do it. You just got to do it. Like, even Netflix, like if it wasn't for the guy, funny enough, his name is Mark, right? Yeah, who borrowed, I think, $3 million in the beginning, to be posting those DVDs out how they used to do it. Yeah, and then actually, I think at one point, so people are like, oh, it's too risky. I think they recorded losses of $57 million in 1 year. Went to Blockbuster to say, hey, look, we've got the framework, this and that, all this client base. Do you want to buy us? And they said no. Yeah, and then obviously everyone else knows the story, right? So, and by the way, that's not the only story. There's people who refused to buy Google. There was people who refused to buy many other different companies. Yeah, and then it turns out they become billions and billions worth. So let's wrap this up, because I know you're going to be coming into our private mastermind for the Real Life Tribe. So I can see a few of them have been commenting on here. So you're in for an absolute treat. Going to get Howard's going to pull the curtain back. And you're going to be able to interact with him live and get your questions answered, specifically whatever deals you've got cracking on right now. And I'm sure he's got some goodies as well that he's going to give to the community. Yeah. So before we wrap that up, I've got a couple more questions. Yeah. Like, based on everything that's going on in the market, Howard, everything you got on your experience and what you've been through in your life, building your businesses, like, let's just say you got a microphone right now. It translates every single language across the globe, yeah, and you got like 30 seconds to just get a message to inspire people. What's that message?
I think the message is definitely that you've got to keep going, keep stepping forwards. There's so many obstacles that can come your way. Most of those are in your head. And so regroup and keep going forwards. And that is the biggest advice that I've got for anybody out there. Grow.
Simple but powerful. Yeah, thank you. Now, so I don't know how many episodes that you may have seen, or maybe none. But I want to ask you a question that we always ask everybody. Yeah. And that is, and here's the thing, like, in our community, we never, ever, ever let people forget that they must do the right thing for the right reason. Now, why is that?
Doing the right thing for the right reason? That's a great question, actually, because I don't think I've been asked that before. But at the end of the day, you've got to be on the right track. And when you're on the right track, you are in your own flow. And to be in your own flow, you've got to be doing things the right way. That I've got no doubt about.
Beautiful. I love the directness of your approach and answers. So in our community, and I'm wondering if you can say it for us so we can add you to the reel, because we've got a reel of all the guests that come on here. Yeah. So we say you got to do the right thing for the right reason, because it's the only way to discover your true potential. Can I ask you again and you say that?
Yeah.
Yeah. Okay. So in our community, we've got a saying that we say you got to do the right thing for the right reason. Why is that?
You've got to do the right thing for the right reason. Why is that? What was the next?
So then you're going to say it's the only way to discover your true potential.
Because it's the only way to discover your true potential.
Yes, there we go. There's Howard with his words of wisdom. What a gem we found here to bring all of this information. I hope it's built confidence. Howard, thank you so much for coming on here. We need to give you a break now so you can get back into the mastermind at 8 o'clock. So thank you so much. Thank you for everyone listening. Howard has been amazing. I think everybody will agree. So until next time, as Howard said, you've got to do the right thing for the right reason.